Hey folks, welcome to InTheMoneyStocks.com's verified investing, trade setups, and action video. This is Gareth Soloway, Chief Market Strategist and Master Trader here again at InTheMoneyStocks.com. Today's date is Tuesday, June 9th, 2020. Let's get into the charts. So take a look at Boeing. Boeing had a miraculous surge to the upside, especially over the last 4 trading days. Basically, if you look at where it was trading 4 days ago, we were talking about $150 stock. It topped out over 230 yesterday, and yesterday's after hours, it even got as high as 239 and change. Today, you're getting a corrective move. This should not be a surprise to anyone, and I'm going to show you why. So I'm short it with verified investing members. We are in the money on this trade. I shorted it as a day trade yesterday with members in the live day trading room, and very rarely do we hold something overnight, but in this case, we did hold it overnight. I ended up banking about 16,000 and change dollars on my 2,000 shares short there, and many other members made even more than me because they did more shares, but I want to show you exactly why. So not only do you have a multi-bar surge here that gets you to be ridiculously extended, but you have to look at the chart. And what I saw here and what got my attention was the extended move coming into this gap fill. And what I noticed is that even though yesterday we were above intraday, you can see the tail there above, we closed at or below that level by the end of the day. Whenever that happens, it's telling you that the institutional sellers are coming out of the woodwork. And basically the chart, by closing below or at the level, is telling you a sell is going to come. So if we had closed above that line, I would have been a lot less confident and likely would not have held my shares overnight from the day trading room. All right, so do you guys understand that? So the close yesterday signaled that today was going to be a downside move. Now, again, that's not the only factor here, and I'm going to go into a bunch of charts today, but I want to show you this. There's something called time counts, which is what we use here at InTheMoneyStocks.com. We utilize a methodology we created called the PPT methodology, and that methodology basically says that when you have price pattern and time factors, so price pattern time, PPT, price pattern time, if you can have multiple factors, you're going to get a rewarding trade of at least 80% success rate. All right, so that's what we aim for on our swing trades, is an 80% success rate. All right, now what I want to show you here is on the SPY. This also led me to see a sell-off coming. And again, you can see a lot of charts here. These are my day trading lines, so lots going on here. But that's okay. The point is, here you could see 1, 2, 3, 4, 5, 6, 7 candles up. When you get 7 candles that rotate to the upside, that are green, that drive a market higher or a stock higher, that's what we call a time count. And ultimately, when you get that formation in the correct setup, you get a pullback in the market. So going into yesterday's close, not only did I like Boeing on the short side, but I was also very focused and sure that we had at least an 80 to 90% chance that the market itself was going to pull back. And you can see down, we're not down big today, but just down a little is enough to take a little energy out of the Boeing move and help coax that chart to a little corrective move. Now, going back to the Boeing chart, I want to talk about where I think this is going on a swing trade basis. Because today's down move, yeah, I took my profits on the Boeing day trade shares with members of the live day trading room, but I actually am still holding my swing trade shares because that's for a larger move. My goal is to make more money on a swing trade, obviously, because you're holding it for multiple days. The answer to where this is going to go is very, very simple, folks. You have this former pivot high right here, right? Any pullback is going to take you right to that level. So, whether it's right at the high pivot right there or at the low, this is your general range. I would say anywhere between 180 and 185 is your downside target. So the beautiful thing about this is, yes, we pulled back almost $12 today, about 5% on Boeing, but you actually should see, maybe as much as, $35 to $40 more downside on Boeing before this is all said and done. And by the way, that doesn't mean that you're not going to get an update here and there. When you have pullbacks, especially with this mentality of buy the dip, you're going to get a few bounces. It's just the nature of it. But ultimately on this pullback, I think you pull back to, at least 185 on the chart, and that'll net us a nice amount of profit on a Boeing short. Now, I want to go into a couple other things here, folks, because you have to recognize the type of environment we're in right now. It is an insane environment driven by the Federal Reserve. And I've been saying this now for weeks, that the Federal Reserve is single-handedly going to cause the biggest backlash we have ever seen against Wall Street. All right, and when I'm saying Wall Street, even me as a trader, I mean, just because we're going to be grouped in. Now, again, I'm just an innocent trader with my traders. We just go in and we go out, and we just, basically we're the feeder fish on the bottom of the institutions that are the sharks that catch the little scraps. And the little scraps mean millions to us, which is great, which is fine. But, I mean, we're not the Federal Reserve, which is causing this. And let me explain what I mean by the backlash, because this should rile everyone up. You have a situation where 40 million people have lost their jobs in the last few months, right? That's horrendous. But what's going to cause this backlash is that the Federal Reserve has basically backstopped the market, where pullbacks in the market are going to be bought because they have said that they will buy debt, they will buy bonds, they will pump money into the stock market, they will do whatever is necessary. And once you start saying that you're going to buy debt, and by the way, the Fed bought J.C. Penney debt as they were filing for bankruptcy, and Hertz debt as they were filing for bankruptcy, then you get in a scenario where there's no stock that's too small to fail or too big to fail. They're all too big to fail. And what that's done is create a market move that is in comparison. I mean, let me bring up the QQQ chart here. All right, look at the QQQ here. I mean, look at this move here. And I got some former lines there. But basically, you're at all-time highs on the QQQ with 40 million people unemployed, with a pandemic that, yes, we're working through, but still, you don't have normal levels of people at restaurants and stuff like that. And here the markets are making new all-time highs. And you're going to have this split level where you have Main Street, which is people that lost their jobs, are getting laid off, are getting furloughed, etc. And then you have Wall Street, which is banking millions of millions of dollars, billions and billions of dollars, I should say, because the Fed has backstopped the market. So if you're invested in the market, you're doing great, but everyone else is not. And that, again, is going to create one of the biggest backlashes in history against Wall Street. And really, I hate to say it, but it's the Federal Reserve. Now, if the market was still down 20%, I mean, we were down 30, 40% on some of these indices, but if we were only down, let's say, 20%, then I don't think you'd get the backlash, because then people on Main Street that are suffering can at least look and say, well, yeah, I mean, Wall Street's not down that much, but at least they're kind of suffering too. But you don't have that. And this is something that we're going to have to deal with across the board for all of us that are investors, whether it's more taxes raised. My guess is raising taxes on long-term capital gains. You're going to see stuff like that going on. And it's going to create, again, this backlash where we're going to see results that are not necessarily good for Wall Street. And listen, that's fine. In essence, I'm not going to speak against some slightly higher taxes, but I don't think that it's fair to backlash against investors and traders who are just making their living when you have the Federal Reserve that is the culprit. Like, I would make money in the markets whether we were down 20% or up here at the current all-time highs. It doesn't matter to me, but I do think that it's a very bad look when you have the Federal Reserve basically backstopping all these companies, but then you have 40 million people that are being laid off. And anyways, I'll end my rant there. Let's go to some other charts here. Let's take a look at Amazon here. Amazon is making new highs. I do have a level that I'm watching up here on Amazon. Pretty remarkable in terms of the move. And basically, you can connect these highs here and look at today. So pivot high to pivot high, you cross through this, you touch exactly on that pivot high. You missed this one by a little bit, but look at what you're hitting today. So what that tells me is that likely this, by the way, huge move in Amazon today, almost 4%, but likely Amazon is hitting a little short-term top today. I wouldn't be surprised if you get a pullback on Amazon tomorrow. Another stock I want to show you guys is Google. I have a key shortable level. We are not there on Google yet, but we are getting close. That's a gap fill. That's a huge gap right there on the chart. That is a level that I will pull the trigger on a short trade on Google. All right, and again, it's technically it's Alphabet, but GOOGL. And again, that level, for those of you at home that are watching this, $1,483 approximately, 1483 gap fill on that chart. All right, if we look at Microsoft, Microsoft continues to be right up there. Interesting thing on Microsoft is you actually hit a double top today. So there is a key double top. I'm not a fan of double tops like this. I'll get into a little education right here before I end this. Basically, I love double tops if they're a straight shot, meaning it's a direct move with no consolidation along the way. But what you can see here is you had Microsoft going up, up, and up, and then right here you kind of topped out, and look at how you've gone sideways. That's consolidation. So what that is it's building strength. And think about it like a marathon runner who just ran from here to here, which was a full marathon. They get to the finish line and they take a break, and they eat some food, drink some water, sleep, get some rest, and all of a sudden they wake up and they're like, oh, now I got more energy. And when it pops, see this little pop now, it's just, potentially it's just getting started. Doesn't mean it always happens this way. There's always charts that fail. I mean, again, anytime, even if you have 80% odds of success, you still have 20% of the time that you're going to be wrong. But my point is, again, this is not the ideal short setup on Microsoft at this double top because of that. And I think we want to keep that in mind. I think that's a really important point here. All right, so that's where we stand on this front, folks. Again, keep an eye on things. We'll see how things go. Very intriguing market. It's almost like today's the token down day that the Fed's allowing. You just get one little down day on the markets, and it's not even down. It's down on the S&P. The QQQ is having an awesome 1% up move, so you're not even getting the downside there. But still, it's kind of interesting that, along the way, a little minor downside on the SPY. We'll even see if we're negative by the close. Boeing's still down pretty nicely, but the rest of the market, again, is doing relatively well. Definitely a rotation out of airline stocks, out of cruise lines, out of banks, and out of oil stocks today into technology. All right, bottom line is, guys, I hope you come and join my service at Verified Investing. Verified Investing is the name of the service. Verified Investing alerts. And again, the website is inthemoneystocks.com. That's inthemoneystocks.com. Just find my name. Find my name. Underneath it, you'll see Verified Investing Alerts, Verified Option Alerts. You can join either service, and I continue to give out winners, folks. We're putting ourselves in a nice position. I do think the market corrects soon. As much as the Fed is backstopping, they can only do so much. At some point, we're going to be way overvalued and have a pretty big correction. My guess is about a 15% drop in the market, which, by the way, considering what we've rallied, is small. And then at that point, we might start to rally back up again. But that's what I'm seeing at this point in time. Have a great one, guys. Take care.